This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices plunged about 5% to an 8-month low on Friday as the US dollar hit its strongest level in more than 2 decades and on fears rising interest rates will tip major economies into recession, cutting demand for oil. Brent futures fell $4.31, or 4.8%, to settle at $86.15 a barrel, down about 6% for the week. U.S. West Texas Intermediate, WTI, crude fell $4.75, or 5.7%, to settle at $78.74, down about 7% for the week. It was the fourth straight week of declines for both benchmarks, the first time this has happened since December. Both were in technically oversold territory, with WTI on track for its lowest settlement since January 10 and Brent for its lowest since January 14.
European Union countries are pushing for guarantees that they can keep their own windfall profit levies on energy companies, and retain the option to impose even tougher measures, alongside bloc-wide measures proposed by Brussels. The EU's 27 countries are negotiating emergency proposals put forward by the bloc's executive last week. The aim is for energy ministers to approve a deal at a September 30 meeting. The country's latest compromise proposal, seen by Reuters on Friday, would not require states to apply the EU's proposed windfall profit levy on fossil fuel firms, if they already have equivalent national measures in place.
Moving on to the top news in the energy sector.
Britain's Finance Ministry and the Bank of England will on October 17 open a £40 billion, $44.17 billion, scheme to help protect energy firms from volatile prices and ensure they are not hit by a liquidity squeeze, the Treasury said on Friday. Energy suppliers across Europe have struggled in the face of record-high wholesale power and gas prices following Russia's invasion of Ukraine, leading governments to step in to make sure they do not collapse. To deliver the scheme, there will be a 100% guarantee to commercial banks covering additional lending extended to firms, the Treasury said, announcing applications for the Energy Markets Financing Scheme, EMFS, would open on October 17.
Greece has cut Russian gas imports by more than half this year thanks to increased deliveries from other producers to its sole liquefied natural gas, LNG, terminal near Athens, the country's gas grid operator said on Thursday. Greece has relied on Russia for about 40% of its gas needs for years, but it has ramped up LNG purchases from other countries in line with a European Union plan to cut dependence on Russian energy. It has been receiving Russian gas via the Turk Stream pipeline, which also delivers to Hungary via Serbia. Its LNG facility on the Revithusa Islet, 25 miles, 40 km, from Athens, can store 225,000 cubic meters of gas and regasify 1,400 cubic meters per hour. Next, we have the top news in metal markets. Spiraling energy costs have forced steelmakers to cut output across Europe, threatening mass plant shutdowns some warn could be permanent in a sector that employs more than 300,000 and contributes tens of billions of euros to the region's economy. Even with 4 wind turbines and over 50,000 solar panels at its site in eastern Belgium, stainless steel maker Aperam has been forced to halt production as surging energy prices bite. The company is now paying for energy in a month what it used to pay in a year and has idled a facility that would normally be melting stainless steel scrap and converting it into giant slabs, employing about 300 workers.
Copper prices slid on Friday to their lowest in nearly 2 months on a strong dollar, and fears of recession hit metals demand after further increases to interest rates. 3-month copper on the London Metal Exchange (LME) had dropped 3.3% to $7,426 a ton by 1600 GMT to its weakest since July 25. US COMEX copper futures HGCV1 dropped 3.8% to $3.34 a pound. The macro outlook is hitting industrial metals quite hard. The main worry is that central banks will allow the economy to slip into recession in an attempt to bring inflation under control, said Ole Hansen, head of commodity strategy at Saxo Bank in Copenhagen.
We will now look at the top news in the agricultural sector.
U.S. wheat futures fell about 3% on Friday, joining a broad sell-off in commodity and equity markets tied to fears of an economic downturn that would dent demand, analysts said. Corn and soybean futures joined the weaker trend, pressured by recession fears and favorable weather for the expanding U.S. harvest. Chicago Board of Trade December wheat settled down 30 to 1.4 cents at $8.80 1/2 per bushel, retreating from a 2-month high set a day earlier. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.